And everybody, it's Tim Reazor with Revere Asset Management. Let's see here, just after 5 o'clock here on a Thursday night. So normally I have the Wednesday night video, got to switch to Thursday, and I am excited for this video. I've been wanting to do a video like this for a while, and tonight is the perfect opportunity. But before we do that, before we get started, stock nerds, market lovers, the podcast is out. We did the podcast early yesterday, and it hasn't been sent out by email, I don't believe yet, but it is posted, and I believe you can get it on the Apple iTunes store. You can get it on the Google Play Store. You can get a video form right here and get it downloaded to your particular device, whatever you want to watch it on. And so I think you'll really enjoy the content, especially, listen, we've done annuities before, but what we covered in annuities early in the show is super interesting. At least I was very interested in it. And at the end of the show, the VIX discussion, I think is very applicable. So hopefully you find some value in that. And then any questions, concerns, comments, take umbrage with anything I'm saying. All you have to do, folks, right here, reach out. TimRevereAsset.com, 855-732-5932. And then look, you want to talk to Hunter, Alex, Don, the guys making the decision in the portfolio, what they're putting in their buys, sells, the reasoning, why. The difference with Revere than everyone else is that we're accessible to you. We answer to you. And that is one of the greatest benefits of, one, working at Revere, and two, is having that ability and that freedom to do that, to talk to you directly like I do every night with you, or most every night, and then to actually correspond and get a dialogue going with the people that consume our content. So we love you for it. We love that you subscribe to our content, and please, please never, ever hesitate to reach out. And then listen right here, America's fiduciary, Danny Stewart, helping people get out of really bad situations, whether you were sold life insurance as an investment, an annuity, you didn't realize with all the fees and stuff, whether you're a client or not, Danny will always, always, always do his best he can to help you. So don't ever hesitate to call. You're not going to get in some endless sales loop. I swear to you, we don't have that. You're talking to the people that make the decisions. You're talking to people that can actually help you. So that is a huge difference with Revere. And so with that, oh, and then look, if you want to, I'm gonna use a chart set that I know I've talked about before with you. It's the IPO Club chart set. A lot of folks it's just a group of people that are like you, stock nerds, market lovers. They talk about the content that I generate, that Don generates, that Hunter and Alex generate in the podcast with Danny. They're just in there. It's a community of just stock nerds and market lovers just like you. And if you are looking for more, like you want a little bit more interaction with the community of people that consume our content and be introduced to those types of people, all you do, find me on Twitter or find me on email. And we've moved it now from Twitter, or I haven't moved it. Mark from Buffalo, wonderful human being, and Captain Dan and a few others in there, they've got it on Zoom now. So you're not on camera, they use it as the platform, and it's a lot easier with picture sharing, and some of them, I believe, jump on some Zooms. I haven't done that per se, but Zoom is a much better platform for this kind of interaction, and it's wonderful. They're just wonderful people, man. I'll tell you what, salt of the earth type human beings trying to make each other better every day is always, always, always a welcome thing. And the core of it is based on the content that we produce. If you want in, you can find me on Twitter at TJ Reazor. I'll get you introduced to Mark from Buffalo. Or you can just email me, tim@revereasset.com. And then stock nerds, market lovers, these videos are for what? Your edification purposes only. They're never ever to be misconstrued advice. When advice, advice, seek advice, all you have to do is, in fact, give us a call. So listen, knowing when to fold them, let's talk about this. And so I'm a really simple human being. And so you can see here, I'm going to use this, the white bar chart setup right there that I like so much that, and by the way, they're full support. It's like open source, right? Captain Dan, I believe Captain Dan programmed it. Mark from Buffalo has really worked on perfecting it. And a bunch of people enjoy this type of charting because they're kind of like me, I guess, in a regard. Like I want simplicity. I'd love automation, right, of what I'm about to talk to you about, and you can kind of get that with this, unless you want to go into platforms that allow you to program. Thinkorswim is not one of those platforms, but I'm always looking to limit my scope and increase my rate of success. And I think what I talk about with you doesn't make it the only way, because there's a million ways to trade, a million ways to make money. But this way just kind of works for me. And so I like to share my points of view with you, and not do things that, and not share things that I really don't do, because I don't think that's helpful to you. But let me get into it real quick here. I've rambled on enough. How about, let's talk about Penn. So knowing when to fold them, right? So Penn down 21% today, and you can tell me it's news, you can tell me all of it. But what I want to point out here is that the chart's telling you where to sell. And I'm going to point this out in a minute. Long before any kind of news hits, the chart's telling you what to do, okay? And so you don't have to think. And I don't mean that rudely. Like I believe in critical thinking. I spend a lot of the day reading and critically thinking about things and how to present them to you. But you kind of want your selling to be automated. You want rules to get you out. You don't want to reason with the stock. Stocks are unreasonable. The market is unreasonable. You don't want to reason with something that can be petulant. You don't want to reason with something that doesn't care. You don't want to reason with things like that. And so when I talk about selling, I like to sell. I've often talked to you about this pink line here that I'm trying to highlight with my cursor, and two closes below or a close below between 5 shift and trend. But I think there's even a better signal, and it's this 5-8 cross, and it's my purple line going across the green line. So my moving average is the purple line's a 5 exponential, the green dotted line's an 8, the pink line's a 21, the blue is a 34, the red's a 50, and the gold line down here is a 200-day simple. And so when the 5 comes through the 8, the downside, momentum is shifted to the downside. And then if you get a close below the 21, hey, you know what? It's probably time to go. Like, you don't need to be the clash. Should I stay or should I go? No, you should go. Answer the question for the clash. Should I stay or should I go? No, you should go. And look, there's no absolutes, but generally that's the rule. And so you can see back here in March, it was time to leave Penn, right? And you don't have to rationalize with this, but there's people still rationalizing with it. And look, this isn't a high horse. You could pick a bunch of stocks. I get it. I'm going to clearly cherry pick a stock that's down like 25% after hours. Peloton was the signaling today to get out of Peloton? No. The signaling was all the way like back here. And you could say, well, here's a 5-8 cross, there's a 5-8 cross, but you really start getting the 5-8 crosses. I mean, back in February. I mean, that's 171, right? But you got a 5-8 cross here, close below the 21. You could say it's January, but really you fall off the cliff here. Like this thing's telling you. And what happens is you get a 5-8 cross here, and then it comes down, but then it shoots back up, and you're like, I was wrong. And it's not that you shouldn't look back or you can't buy back in. No, au contraire. It's that once you get it again, you got to be willing to get out. And some of you might view this because this is hindsight trading. Like, this is all, Tim, of course it's clear, it's hindsight. Yeah, I get it. But if you have the rule that just gets you out, you know not to mess with it again. But I'm going to talk about getting back in here in a second. I'm going to show you some other charts. So there's Peloton. How about Zillow Group? Was Zillow Group with their disastrous earnings call this week? No. Was it? No, you should get out. No, Zillow was signaling. Look at this 5-8 cross back in the February timeframe, and it breaks to 21. But it comes back up. You could buy it, but I'm going to give you, this chart didn't give you the signal to do so. And even if it does give you the signal to do so, once you get the 5-8 cross again, you're going to want to get out. And so, but look at this. These are examples of stocks that are just completely going kaputs this week. And you're out over here. The thing is, you have to actually have the courage of your convictions to act upon your rules. My friends, that is the hardest sentence to put into action, because trading is so solitary. Because you want, am I doing the right thing? What if it comes back? Oh my gosh, I sold at the bottom, quote unquote, the bottom again. And the moment I sell, it's going to go up. Like, all the self-doubt comes in. So my investing is 90% psychological. But that is why there's a community, the IPO Club at TJ Reazor. Email me, Tim at Revere Asset. I'll introduce you to Mark, Captain Dan, and they'll get you the invite to the Zoom, and you can get through these things. And that's what the group's about, is helping, enact rules that work for you, and having discussion around things, not pointless discussion, but actually pointed discussion that's fruitful, and helps most everybody. So look, that's selling, right? It's easy to do in hindsight. What about buying, right? Like, and does it have to be sexy stocks? No. Is McDonald's sexy? It depends. You like quarter pounders with cheese? I do. And so, but look, you got it right here. Look at this. You get a 5-8 cross right here. See, that's that white bar. You get a 5-8 cross. As a bonus, you're crossing the 21. As a bonus, you're getting a moving average stack. 8, 21, 34, 50 day, and away she goes. It's powerful. I'm telling you, the signaling is powerful. Do they all work out? No. If you get a 5-8 cross to the upside, are they all going to rocket up? No, they're not. But this is probabilities. and you're trying to put yourself in the best position, right? With risk metrics in place. So if one thing doesn't work, you don't blow up. You have to be able to do both here, have a strategy in place that you can execute and apply risk discipline. And so look, and you don't have to like go screening across the universe. What if you were like, man, I like me some quarter pounders with cheese and some chicken nuggets, right? So I'm just going to hawk McDonald's, and when I get my signaling on McDonald's, I'm going to buy, and when I get my signaling like right here, I'm just going to get out, and I'm just going to trade McDonald's. You could do that. Oh, Tim, you're way too simplistic. Listen, sometimes the best strategies are the ones that you can execute, and they don't have to be that complex. What about Tesla, right? Tesla, where was the signaling for Tesla? What I mean, and by the way, if you bought it here, it went up. You bought it here, it went up. You bought it here, it went up. Are the probabilities in your favor there? No. But where were the probabilities here? Let's just zoom in on this chart. See, the white bar tells me I got that 5-8 cross right there on 823. Is there another one here? No. I mean, doesn't mean you can't, as it touches the 21. Like you just look, oh, there was one over here at 729. But that signaling came down here at 685? It's a good trade. How about Netflix? Netflix, right. And so Netflix 818, you get another white bar here at 927. And look, the 5-8 cross isn't the end all to be all, okay? There is no end all to be all. It's the markets. There's a gazillion ways to make money, gazillion ways to lose money. And so what you want is what works for you. And what works for me are charts. The reason why you don't see my face on these videos is because I don't matter. The charts matter. You matter. That you can understand and put into action things that you and I talk about. That's what matters. I don't matter. That's why you don't see me. And having this signal so I can see it painted white. Oh, I got a white bar. Because imagine imagine you and I can't see this, right? We don't. I mean, well, let's not be hindsight. But I got 2 days of I got a white bar. I got a white bar. But what is different about this white bar from this white bar? What could be the difference? Oh, the moving averages are starting to spread apart. The 5, the 8, I can see the 21, I can see the blue line, I can see the red line. They're starting to stack in sequential order. See, that's the difference, right? And so, do we have a 5-8 cross to the downside? Yeah, we do right here. And you could have got right back here. Like, would you have been wrong to hold? No, to each their own. Right? But remember, you don't know that it's going to do that. So you have to have rules for entry and rules for exit. NVIDIA, right? Big old foot stomper today, up 12% today. NVIDIA. Yeah, look at this. Let's zoom in here. NVIDIA, oh, that's a horrible looking chart. Let me see if I can get that a little bit cleaner for you. I don't think I helped you much. Look at this. It's confused. NVIDIA it's going through a breakup, right? It's confused. No one wants to go to the prom with NVIDIA. I find a date to the dance. Oh, 5-8 cross. Things are looking up. Maybe we're going to get a limo to the prom. And there you go. And so, but what day was that? That's over here. That's 1014. That's 212. It's 100 points lower than where you are today. And so, look, it's easy in hindsight. What's hard is when you get it now. Let's do that. Let's look at one right now. Amazon. Like, what if you just wanted to watch like 10 stocks, 5 stocks? Tesla, Amazon, Netflix. That's 3. Pick 2 more. And so, look, you got a white bar here, right? 5-8 cross. Can't quite get the job done. Gaps down. They don't all work. Remember me telling you that? They don't all work, but minimal damage. Okay, now we've got another shot. That was yesterday. And then here you go. Here's today. And so look, can it break out now from this consolidation? See, I don't know, because here I'm telling you I don't have hindsight. I have now. Okay. So is it going to work out? I don't know. But I got a signal. Oh, I got a signal over here, Tim. And how'd that trade you? Well, yeah, no, it's been Amazon's a tough stock, right? And what's the difference here? Oh yeah, you don't have sequential ordering. And you don't really have sequential ordering here of the moving averages. And just one more time, see the 5, the 8, but then there's the 50. So maybe Amazon's not the best thing. I find you get the best results when you're breaking, when you have the chance to get the 5-8 cross and your moving averages are stacked. 5, 8, 34, 50, 5, 8, 21, excuse me, 34, 50, 200 day. Let's do a couple more here. Let's do Home Depot, right? Home Depot's not sexy. Oh, these gains are sexy. Look at this. 5, 8, 21, 34, 50. So we've got stacking, got the signal. And there you know, before Bob's your uncle, you're up. Let's see. DKNG. You know what? We're going to end with this one. DKNG. So like, look, this is one more time here. I wrote this down specifically because look, here's a white bar. It doesn't work though, right? So you know to limit the damage, but you have to be able to you have to be willing mentally to take the loss, and that's hard, right? That's really hard. That's all the way up here at 60. That's back in September. And then look what happens here. You get another 5-8 cross. But what keeps you out of trouble here? You're not sequentially stacked with the moving averages. And quite frankly, the trick here for me is always thinking about how much I can lose first. And you know, like in a really good, may I say, hot goods rollicking uptrend, you can get away with making some mistakes. But the moment, you know, the market turns or you go chop, you will get punished. And we're in a good uptrend right now, and DKNG can't get her done, right? And so you want to kind of put all the odds in your favor. And if you have a little tiny checklist, like you would say, do I have a 5-8 cross? Okay, that's one, check. Are my moving averages stacked? No. Okay, well that's a two-point checklist, and there you go. You can add some fundamental screening. Maybe you just like to trade, just focus on 5 stocks and rotate between them, right? And then some of you are going to come back with only 5. Is that diversified enough? Look, this is just one facet of your overall strategy, right? It should be. So anyway, hopefully that all makes sense. Again, these videos are for what? Your edification purposes. They're never, ever to be misconstrued as advice, okay? And so look, one more, RDFN, Redfin. When was the Redfin back here, right? Back in the spring. And you're really not getting that moving average stack in any other place in time. I'm telling you, rules keep you out of trouble. Rules reduce risk. And that's how I approach it. And I hope that helped tonight. So with that, let's see, I believe Hunter Bazingo has a video tomorrow night. And please do give the podcast a listen, and I will see you at the next update.